Okay, so there's a couple of really quick thoughts on building a good solid team and working well as a team member. Now we're going to transition and talk about borrowing from banks. Okay, thank you for hanging in there. You are doing a great job. The next topic that we're going to talk about is really important and it doesn't get talked about enough, and that is establishing good credit. So let's go ahead and dive in. First place that we want to start, once again, is to understand what credit is. Basically, credit is a loan. That means that we are borrowing money for something like a home or a car or another important piece of our journey where it's going to take a lot of money to do that, and we might not have that money right now. That's why when we think about things like our credit report, it's good to understand this so we know our credit report is a loan report. Or a credit card is really then a loan card. We know that every time we use that credit card, we're actually taking out a loan. So we got to start with this understanding that credit is a loan. Everything else kind of flows from there. So there you go. As I said, a credit report is a loan report. Credit card is a loan card. Very, very important to remember those two things. This is an example of what a credit report might look like. I'm not going to bore you with the details other than to make sure that you're aware and you make other students aware that there is a financial report card that will exist and will tell people, banks, and people we might want to borrow money from how trustworthy we are. And that financial report card will have a record of how well we paid other people back, how long it took us to pay them back, how much we borrowed, whether or not we paid them on time, which is one of the most important things that a bank will want to see, is that we always paid things back on time. That's one thing we could do that will really help us always. So having a good credit history, good credit report is like having a good report card. It makes more opportunities available to us. If we have a bad credit report, it's not the end of the world, but it's kind of like having some bad grades. It makes it a little bit more challenging then to find more good opportunities. We have to do a lot more work, and it could take a lot longer to get ourselves into those good opportunities. Okay, so now we know what credit is, but how does credit work? Let's take a look. Credit cards. When people think about credit, they think that, hey, I'm just going to be swimming in a sea of money here, and that credit cards are free money. Well, that is probably the furthest thing from the truth. Credit cards can be a fantastic tool, can be very helpful if they're used the right way. If they're used the wrong way, credit cards can be one of the most devastating things to your goals and your finances and your money, and make things very challenging. Here at Consumer Credit Counseling, we have people come into our doors every day who are struggling because of credit card debt. Sometimes people have hundreds of thousands of dollars that they've racked up on their credit cards, which I know sounds hard to believe, but it happens. So let's take a look at a scenario here. Let's say that we got a credit card that was worth, well, I'm not going to say worth, but we had a credit limit of $2,500. That means we could use this credit card and spend up to $2,500. And that credit card comes with an interest rate of 20% APR. We're going to ask the question, what would you buy with it? So I want you to imagine in your mind right now what you would possibly do with a credit card that had a spending limit of $2,500. What would you buy? Would it be some sort of video game system, clothes, food? What would it be? And imagine how much you would spend. Now, the thing that we need to remember is that credit card has an APR. That stands for annual percentage rate. In this case, it'd be 20% interest. So there's going to be some cost to using this credit card. And let's take a look at what that cost might add up to next. Once we pay back our credit card, or we're ready to pay it back, we have three options. So we might use our credit card this month. Next month we get a bill. It's going to say how much we spent. Let's say in this case, let's pretend we spent the full $2,500. We've got three options. We could pay the minimum. We could pay some of it, or we could pay all of it. I'm going to just venture a guess that if we spent $2,500, most of us would not be able to pay that all back. We might be able to pay some of it, and many of us might be able to pay the minimum. The minimum is a small percentage that they will accept as a payment. So it might be 4% of the balance, usually something like that. Or we could pay more than that if we wanted to. So which do you think is the best option? So it sounds like the minimum payment would be a good option. Let's take a look. Here are some real examples of our repayment options. So number one is our minimum payment. If our balance is $2,500, we had a 20% interest rate or APR, annual percentage rate. The minimum payment required would be $100. If that's what we paid, and we continued to just pay that every single month, it would take us 32 months. Okay, in case you're wondering how long that is a little bit less than 3 years. So that's quite some time. Altogether, we will have paid $3,261. So we will have paid $761 more than what we actually spent over the course of that time paying that back. So that's a pretty long, expensive option. Maybe not the best one. Let's take a look at option 2. Yes, we're crying here, by the way. Okay, so option 2 is to pay more than the minimum payment. So we might choose how much we're going to pay. Maybe we pay $250 a month, which would be a stretch for a lot of people, definitely. But if we did that, it would cut down the time to pay this off to only 11 months. So a lot faster, and we would only pay $2,758. So we're still paying $258 in interest. We're paying $258 extra, but it's a lot better than the amount that we were paying before. So not as many tiers, but still not the greatest situation. And then the final option would be if we were in such an amazing position to pay this in full the next month after we spent the $2,500. Well, guess what? We've paid it off next month. And take a look at this. We don't pay any more interest. So this 20% over here, it's not a very good circle, but you get the picture. That 20% doesn't matter when we pay the balance in full every single month. This is the best way to pay a credit card, is to make sure that we are only spending as much as we know we can pay in full every single month. Okay, so lastly, we're going to wrap up this section really quick by talking about what you need to know to start building your credit. A few things. Number one, start small. You can get what's known as a secured credit card. When you turn 18, you have to be 18. You can get it from a local bank or credit union, and you can get a credit card by putting down a deposit for $200 or $300, and they will allow you to get a new credit card to get yourself started. That's a great way to go. When you get this credit card, you want to only spend as much as you know you could pay in full every single month. So in other words, maybe once you're working and you might have a car or another bill, cell phone bill, maybe you pay those things with your credit card, but you pay that off in full. You pay that credit card bill in full every month. And then lastly, we want you to remember don't swipe the small stuff, as you can see. All right, don't swipe the small stuff. That means don't use your credit card for snacks, for small little things day to day, because that will add up very quickly and can become very difficult to deal with later on down the road. And you'll be doing great and you'll be happy and kissing hearts here, apparently. Okay, now we're going to start wrapping this up by talking about borrowing for the rest of your life. That might be for other big things that are really important, like school, cars, and homes. Okay, so the next thing we would probably want to know is, how do loans work? When we take out a loan, we are borrowing money from a bank or a credit union, and we are agreeing to pay it back over a period of time with a fee called interest. That's how a bank or a lender actually makes money. And depending upon the type of loan that we're taking out, let's say a student loan, it might be a 10-year repayment period. That's actually standard for a student loan. That's a long time. For a car loan, usually 2 to 5 years. There are some car loans that have stretched out to like 7 years. And for a home loan, the standard is 30 years. One important thing to understand about the period of time for how long you pay a loan is that the longer you pay, the more interest you pay. So if we can, we want to shorten that period of time for how long we pay the loan, and we will save a lot more money and be able to get the things that we want, like the cars and homes, and do it at a good price. And that's when loans can be very helpful. We get a loan, number one, by having a good credit score. That's why we talked about good credit, paying on time, and some of those other things first. Secondly, we have to have a steady income, right? They want to know that they're going to get a payment from us, that we will be able to pay them back on time. So they're going to want to check as to whether or not we have a steady income. A lot of banks will want to see that we've been employed for at least 1, 2, or 3 years. And then finally is collateral. This is the one that doesn't get talked about as much. It's a little bit more of a technical word. What that basically just means is something that the bank feels that they can take back if the loan is not paid, or something they can take from us to cover the losses if the loan is not paid. So in the case of a home loan, the house is the collateral. If we don't pay that house loan back, the bank can take our house. Same thing with a car. Or in some cases, the bank might ask for other forms of collateral if we've got money in a savings account or things like that. So that helps us to be able to qualify for that bank loan. So another little thing we want to give you right here is this acronym for things that you really want to think about, and that you already are, I'm sure, when it comes to your future and what's important. And we say prep for your future, like prepare. But prep stands for 4 things: passion, requirements, education, and pursue. So often when we think about what it is that we want to do, this gets overlooked, but definitely figure out what you love to do. There's an old saying, it's kind of corny, but I think it's true. And it's this: figure out how to do what you love to do, and you'll never feel like you're working a day in your life. And it's true. When you love what you're doing, it doesn't feel like work. Next, we want to figure out, what do I need to learn to be able to do that? What are the requirements for how I can do that job? So again, figure out what it is you love to do, figure out what it's going to take to learn to do that job, then go and look at what you need to obtain as far as education in order to learn that. And don't think of it as in one way that you got to do it. I know a lot of times we hear you just got to go to college and go for 4 years, etc. That's not always true. There's 2-year degrees, there's technical education. One of the best ways to think about your education is to approach it from the standpoint of, what is it that you need to do at the minimum to get to where you need to be? That's probably going to give you the best return on that investment. And then pursue that. Look for jobs in your field. Look for those types of opportunities that you know are going to be best for you. All right, now we're going to wrap up this section talking about a couple types of loans that you'll probably engage with at some point in your life. And we're going to talk about what you want to consider. What's important to think about if you were to get an auto loan or a car loan. There's some cars for you. So first, you want to think about how much you can really afford. And what that means is you're going to take all of the costs into consideration. When you buy a car, it's not just the car that you pay for. You also have to pay for gas, for insurance, for maintenance. all of that can add up to quite a bit every single month. So just to give you an idea, right now in 2018, I don't know, the average person here in Rochester, give or take, can be different obviously, but they're probably going to pay at least $150 to $200 a month for gas. So that alone can be pretty difficult to deal with. So we want to go back to our budgeting, make sure we understand how it fits. Secondly, buy with your brain. Of course, cars can be an emotional thing. I'd love to have a Ferrari myself personally, and expecting to at some point. But right now, I can't do the Ferrari. I got kids that I'm paying for who I think are more important than my Ferrari. So I got to, make the right decisions within my bigger picture. Thirdly, fuel. So I mentioned how much gas can be. You can look at the miles per gallon for each vehicle that you might consider buying. The higher the number for miles per gallon, the less you're going to pay for fuel. And then the other costs, right? So we talked about insurance, we talked about maintenance. That can also be something you pay for. So with a car, you have to get like oil changes and you have to change things like the air filters, and that can cost you several $100s a year as well. And then finally, home loans. We are all probably going to utilize a home loan at some point in our lives because many of us want to buy homes and we might not have and usually don't have the cash to buy a home. So we have to borrow money from a bank. And just like with the car, we want to make sure we buy a home that makes sense for us because again, we're locked into that loan for 30 years unless we sell the house and get out of the loan. Otherwise, we're going to have to deal with that payment for that entire period of time. And as you heard, if we're unemployed for a period of time or something like that, we still need to figure out how to pay that loan to avoid the home being foreclosed on or the bank having to take the home back. There are some flexibilities there. The banks have to work with you and help you out if you weren't able to pay it back, but we wouldn't even want to find ourselves in that position. So when you're looking for a home loan, again, make sure you buy and that you're thoughtful about what you can afford. Okay, we're getting to the point now where we've been at this for a while. If you haven't taken a break yet, you might want to do that. Come back to this at another time. If you're feeling a little bit tired or my voice is starting to sound like blah, 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 it's probably good to make the most of your time and take a break. And then we're going to come back and get into conflict resolution. So as you prepare to do a Go for Gold presentation in your school, which we're really hoping you'll find the opportunity to do, we want to give you some tips and some information that will help you to avoid any presentation hiccups. You got a lot of flexibility in how you can approach this, but we want to make sure that you are well equipped. So we're going to go through some scenarios and we're going to think about a few things together. We're going to take a look at just a few scenarios. We're going to think about how would you feel if this happened to you, what you would do, and how you could solve the problem. So I want you to think about it as we read these few scenarios and I'll talk us through it together. Here is the first scenario. We're presenting about saving money and someone asks us which bank they should use and what the interest rate is for each bank account. That would be a very interesting question if you got that from a student. So if there is something that you don't know, don't be afraid to tell the students that you aren't sure, but that you can find that information out for them afterwards. That way they'll know that you're not just blowing them off like, I don't know, and I don't care, but they know that you're being honest. And at the same time, they know that you're still willing to help out if you can. If you can't, then just be honest about that as well. Or you might direct them on how you think that they could figure that out. If it's something that you shouldn't give advice on, such as this scenario, you probably should not tell a student what bank they should use. All right, that's a personal choice and you probably don't want to give those kinds of recommendations. We generally avoid that. Tell them who might be a good source to ask, like their parents or guardians or other trusted people in their lives. So that's how you might want to think about approaching a scenario like that, where somebody asks you a question that you don't know the answer to or that you can't really answer. So in our second scenario, a student keeps raising their hand to ask questions and to give their input on everything that you say. That does happen sometimes. And you know how it works, where sometimes that student is doing it on purpose just to be annoying. So what do? Well, number one, make sure you keep your cool and just take a moment to let everybody know that for the sake of time, you're going to have them hold their questions to the end of the presentation so you can stay on schedule. All right, so that way you just cut off the opportunity to be interrupted by questions, but you're also letting them know that you'll give an opportunity at the end to answer questions, and then that's where you can kind of control that. All right, so you're going to let them know that you're keeping things moving for the sake of time and that you can't continue to answer questions at that time. Okay, so the third scenario we're going to talk about is one that comes up sometimes and kind of annoys me personally, but it happens when somebody tries to derail our conversation. So we're in the middle of a presentation, somebody raises their hand, and then they turn it into a conversation about a celebrity or something else. They just try to get us off topic. So what do? Well, first we try to acknowledge what they said and try to, acknowledge its importance as best as we can, but express that we have to get back on topic, or we summarize what they said and try to return to the topic. So we might say, so what you're telling us is these points here, and let's talk about how that might relate to what we're going over today. It doesn't always work perfectly, but that's usually the best way to do it. So somebody doesn't feel that you're just like brushing them over if they were trying to make a good point, or it becomes some sort of contention that you have to deal with, which is the last thing you want to have to do. So think about that, and that should help you.